From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome. Well, the day in business and finance, today at least, has very much been dominated by the central banks. Danny, the RBA and the BOJ, of course.
Absolutely. So the market has taken the RBA decision to leave rates on hold, but they've taken the statement to be more neutral, although they haven't ruled anything in or out, have they? But the CBO 200 responded in kind to the statement of monetary policy, up over 5 points, or just over 0.3%.
Yeah, so I guess that not ruling anything in or out, that will go down in history as the line from this March meeting. We don't have another meeting from the central bank here locally until the beginning of May. Of course, it's been 6 weeks since the last one, so long time between drinks. And Martin Crabb from Shaw & Partners is here to help us make sense of it all. Martin, welcome.
Thanks for having me.
So this is, I was speaking with a guest earlier, said the narrow path has become more like a goat's track because there are so many risks around. How do you read the statement coming from the RBA?
I'm the opposite. I think the data is coming exactly where the Reserve Bank thought it would. So I think that the narrow path's becoming very, very wide. It's like a 4-lane highway. I don't think it's difficult for the RBA to navigate the interest rate outlook, and the markets have settled on 1 or 2 cuts, maybe one later this year. I think most commentators are saying November we'll definitely see a cut. And you know, all of the data is pointing towards a soft landing, and that interest rates are slightly restrictive but not overly so, and that given that we're going to see quite a lot of government spending and tax cuts this year, it's already baked in, the tight labour market can allow them to leave rates higher for longer without really damaging the economy. So I think they're in a pretty good position for the first time in a while. And now it's just all about communicating that message to the market that we think interest rates are appropriate. They're neither too high nor too low. They tilted slightly dovishly by removing the fact that they didn't rule out a rate hike. They just said they're not ruling anything out. As you said, that's now the phrase du jour. But I think the hard landing scenario is out of the window, and the no landing scenario is probably out of the window. I think they're landing on a 4-lane highway.
This time it's different, Martin.
And I don't think it is. I just think that the fear that everyone had was, well, the two fears were inflation's still going to persist, and we've got wages coming through now. It's going to be a disaster, and there's going to be another round. They're going to have to tighten. Or the other one was, my God, they've had them tight for so long, and people have chewed through their savings, and now the economy's going to hit a brick wall. Neither of those things look likely at all now. I think the smart money's on a soft landing. It's probably a 70. It's probably gone from a 60% probability probably up to 75 or 80% probability now. So I think the markets are very well tuned for what is likely to happen.
Before we get into what this means for investors, I don't think you can look at any central bank in isolation, particularly not today, when we've had the BOJ hike. So first time since 2007 and going against, the grain of most global central banks. So what do you make of that? Yeah,
well, very well anticipated. I mean, obviously you had a change of governor a couple of months ago, and they said, look, the new BOJ will come out and change policies, but they won't be in a huge hurry. Interestingly, if you dig into the statement in a bit more detail, they've sort of said they're going to unwind some of the QE. So the Bank of Japan owns 7% of the Japanese stock market, for example, and the only reason they bought stock is they run out of bonds to buy. So the Bank of Japan owns about half of the Japanese government bonds on issue. So they'll start unwinding that as well. Interestingly, despite that, the Nikkei didn't seem to respond too much at all. There was a little bit of a wobble in the currency. I think traders were very long yen going into it, and saw the yen sold off a little bit on the news, which was interesting. But I think we'll look at this more of a turning point. It's not like it wasn't predicted, but it's like the final end to easy money anywhere in the world. The last bank that was holding out with negative rates is now gone, and so the end of easy monetary policy is upon us. So that's just the yen. So the yen actually jumped up against the US dollar on the back of that result, which is interesting. Sorry, the US dollar jumped up against the yen, which is not supposed to happen given they hiked rates. But yeah, I think it's interesting. The RBA's probably next move is down, and the Bank of Japan's clearly the only bank in the world that's going up.
Albeit they're not super hawkish, are they? They're just little step into the water. Just in terms of gold and the strength there in gold miners, what are you thinking at the moment, Mark?
Yeah, there's been a massive divergence between the price of gold and the performance of a lot of gold stocks. So a really good example would be Newmont. So Newmont bought Newcrest and is now listed on the ASX as NEM, which is a CHESS depository instrument. And it's fallen about 25-30% since it bought Newcrest. And yet the price of gold's gone nuts. So the price of gold on that chart there in Aussie dollars is well over $3,000 an ounce. So everyone's making a lot of money. Most gold miners have cost well below $2,000, in fact, even into the teens. So the black line, which is just the market cap of Evolution, Northern Star and Newmont Mine, which are the three big golds in the ASX, that's been going in the opposite direction. So typically they correlate quite well, but you can see there are periods when the market just gets very concerned about the outlook for the gold price. And so we think that gap will close not by the gold price coming down, because I think the gold price dynamics look quite good, but more the black line going up. So we think you should have a reasonable allocation to gold stocks in your portfolio.
But you're talking the big three, or do you look at Bellevue Gold?
Oh yeah, we love
those that are just...
yeah, we love the juniors as well.
Yeah.
I mean, I think there's probably two parts to this. From a macro perspective, go with the big liquid gold names. But in terms of being a stock picker, I think it's worthwhile having a look at the junior developers and explorers. That's where you get a really good bang for your buck. So we do like I think Resolute is one gold stock that we like. But in the majors, we just own Evolution in our portfolios.
So given all that we've just discussed, is now a good time to be an investor? You'd say that it's always a good time to be an investor,
yes, of course.
but I mean, where are you sort of looking for opportunities then?
Yeah,
generally?
look, it's easy to find things to sell right now, Nadine, to be honest with you. Markets look pretty fully valued. But the macro just keeps getting better. I think if we weave together the Bank of Japan and what's happening in the Reserve Bank, and also what's going to happen tonight with Jerome Powell, is that monetary policy settings are such that it's a very good outlook for investors. You've got an improving macro, even with the Chinese data that's come through the last few days. China seems to be okay. We're hitting a soft landing in most of the major economies. Inflation's coming down. Real wages are starting to go up for the first time. Confidence is coming back. The macro setup's really, really positive, and it suggests you're fully invested across the market. And there's plenty of income out there. You can get income in bonds, you can get income in credit, you can get income in cash. There's plenty of yield out there for investors, even if they're more cautious. But I think the macro setup's really, really good right now. The thing holding us back from being super enthusiastic is valuation. Like, markets have moved a long way, but I think you don't want to be out of the market. You don't want to be sitting in cash being defensive right now. I think you want to be fully invested and taking advantage of the improving macro, but also all the innovation that's going on around the world as well.
Interesting, particularly after we saw Jensen Huang's big, seminar that he had. It'll be interesting to see what the analysts have to say about that.
Yeah, well, I think Nvidia was off a little bit in the aftermarket, but we'll see how they really digest the news that's coming out of that blockbuster company.
It sure is, isn't it?
Yeah.
Look, if a little bit of this, a little bit of that, there's a phrase coming from the RBA, could go one way or the other. I think that Nvidia is the word of the year so far, at least.
Yes.
Let's wrap it up, shall we? Martin Crabb.
Absolutely.
Shaw and Partners, thanks so much for joining us.
Thank you.
We'll just quickly run you through some of the corporate stories out there today. KMD Brands, so think Kathmandu, posted a 14.5% decrease in group sales in the interim first half results. So that is an indication that we're seeing, a weaker consumer.
Absolutely, and Aussie Broadband has filed an urgent request in the Federal Court for permanent and interlocutory, I can't get that out, injunctions to set aside.
Didn't really need to be in there, did it?
Superloop's noticed, and this is the latest twist in the ongoing battle for market share. And it's an interesting story, as you pointed out yesterday, Nadine.
One that we are watching closely in satire. Well, shares coming under a bit of pressure, even after it said that it had updated the checkout flow on its platform after conducting a review of its policies, getting in a bit of trouble over perhaps duty not paid. And we had more M&A. Genesis Capital looking to acquire Pacific Smiles. Its board has endorsed that offer, but the stock of the day was Boral. Here's what our experts had to say.
Boral, as I would see it, is not a great quality business. It is very hard to pick what its next 12 months of earnings look like. Frequently there's excuses about weather and all sorts of variables that are outside of their control.
Not a quality company.
Yeah.
So we need to look at it. And if you look at their earnings, I was just having a look at it from 2018, the earnings per share were 43 cents and the last report was 19. So it's half what it was, and the actual H growth, which we have, is negative 25%. So the earnings have been dropping, sales have been dropping at 12%. So it's not just earnings, the sales are going down, earnings are going down faster. And we're showing a returning negative 31% a year going forward. That's how bad it is.
Right.
We wouldn't touch it, and I think it's a very poor business.
What if you're in it though? Would
I'd
you
sell.
be getting out?
I
You'd be
would,
selling.
because I'm showing very significant negative returns going forward. Why would you subscribe to that on the basis that maybe Seven will kiss it and it'll turn into a princess or something?
Got a chuckle from you there,
Yes,
Danny.
exactly. Very funny. Yes, the prince kissing Boral. Anyway, let's have a look at some of the leaders and the laggards today. And we can see Bellevue Gold as well as Nickel Industries on a rally. It looks like they have a contract that's been resolved. Karoon Energy, in fact, energy stocks generally in focus today. Tabcorp back in the green, and another gold miner, West African Resources.
Yeah, so continuing on that gold theme from our guest, Martin Crabb from Shaw Partners, Polynovo coming under further pressure, off by 6%, and Nanosonics down there off by 3.25%. Very quickly, the day was won though. It was a positive finish, and no small thanks to some of these iron ore miners. Big miners, iron ore price rebounding slightly, and to your point, energy as well doing its part.
Energy was strong as well today, and both of those sectors are benefiting from rising prices. Oil price actually hit $86 a barrel overnight last night, so quite firm.
Consumer staples, we've heard a lot about the consumer through the RBA words and that media conference that we brought to you. Here's a look at some of those staples names. So a weight on the market. We have inflation in Canada. We have building permits in the United States. Housing starts there as well as we wait for the FOMC, of course.
No, the next big meeting. And what's happening in Australia? So the US Fed policy meeting will start Wednesday their time. We've got a UK CPI and PPI out, New Zealand Westpac consumer sentiment, and earnings here in Australia. Oh, it's testing me, SNL and WAFT. I can't remember those codes. Anyway, ex-dividend stocks, Mader is one of them, I think, going ex-dividend. So we're getting down to the smaller end of town.
Yeah, it's the cycle, isn't it? It's the circle of life. West African Resources, WAF. There you go. We both learned something new. All right, a final check on the figures. I know we're running below, or I should say a little over time if you're watching us live on ausbiz.com.au. The S&P ASX 200 finished at 7,703, up by close to 0.4%. You can see the trajectory of the COB Australia Index post 230.
And just really interesting, the Australian dollar is actually pretty weak, off by over 0.5% at 65.23. So again, that one took a tumble. It had rallied a little bit into the 230 meeting, but it has taken a bit of a tumble, Nadine.
Yeah, it has. So, some of that obviously RBA, but the BOJ, we'll be talking about that still tomorrow when we hope you can join us. We're live at 9:45. In the meantime, you can catch up on demand, ausbiz.com.au.
Have a great evening.